what are some of the other big mistakes that you see small businesses make when it comes to tax?
I think some of the mistakes that small businesses do, especially those who are into tendering, because normally they don't engage tax professionals. I'm sorry, maybe that's gonna
they
rub,
don't. They want to save money as much as they
it's gonna
can.
rub people the wrong way. They'll engage people who are not really tax savvy, and then they file returns when the business is trading, and sometimes that will result in danger, because when BES comes in and audits you and finds that you've been filing returns while you have income, then it can result in significant penalties. And it goes back also to the issue of tax education, because most of the time people know about tax clearance certificate.
Yes.
Because it is required for tendering, it is required at the bank. They don't know anything else apart from tax clearance certificate. So as long as they get the tax clearance certificate for them, they are fine. Whether they need to file financial statements or anything else, they don't know. So you find that people file no returns, and when they get audited, they pay penalties, because simply to say you have been evading tax because you are declaring no returns while you are earning income and you are in a profitable position, which can go up to 200% of the tax that you should have paid.
This is where the rulebook ends and the real brand talk begins. Welcome to On Brand. Welcome to Off Script.
Hi, Tumelo.
Hi, how are you?
Good, and you?
Good.
Okay. So if people have been paying attention to current affairs, tax has become a big conversation in the region, and more so now in Botswana. And we're seeing the introduction of tax reforms, probably the biggest in a couple of decades. And this wasn't a conversation before. And that's probably because we're cushioned by our diamond revenue. And this is now going away. And I think a lot of people are stressed. They don't know what the impact is. They're just seeing prices go up. And in the middle of this, there's these new tax reforms that are coming in. And I thought this would be a great time to have this conversation with you. And who better than a chartered accountant, a tax consultant, and you are a founder of a platform that educates around tax as well and makes it easy for people to understand. So maybe let's start with why. Why are all these tax reforms coming now in the middle of one of the most challenging moments of our economy? Is it the best time to start changing and introducing new taxes and stuff like that? And what's your thoughts on that?
All right. Thank you for the invite. But I think what people maybe need to note is that these reforms have been in place or planned for the past decade. So if you look at the Income Tax Act, it has been on review for the past 10 years. Same for the Value Added Tax Act. The old act, the Income Tax Act, was first reenacted or reviewed in 1995. So that's 31 years ago. And then the VAT Act was first introduced in 2002. That's almost 2 decades ago. So it was indeed time to review these two acts and ensure that we are aligned to the world, we are aligned to OECD, we are aligned to IMF, just so that we are at par with other countries in the world. And of course, I know the big conversation, of course, will be around the increase in tax rates and all that. But the reforms really are more than that. It's about ensuring that all aspects of the economy are covered. Like when you talk of the digital economy, it's it's one of the big things that are here, and the old acts didn't capture that. So countries around the world have been having that conversation. How do we tax the digital economy and all that? So even though it will affect some aspects of our lives, and this increase in the goods or the food that we eat, because some of them are going to be taxed now that haven't been taxed. You talk of private medical services, they were exempt at some point, now they're standard rated. So because of it impacts our lives, and now the economy is in a bad state. So that's why now there's an uproar around that. But the reforms really are more than just about tax increases. They were timely, I'll say, but of course, when it comes to the increase in rates and also taxing some goods, maybe that should have been put in hold. But generally, I'll say it's a welcome development that we are having tax reforms.
Yeah. So I guess there's probably a gap in the education, and that's part of what we would like to do today. So
Yeah.
maybe let's start with taking away all the jargon and get back
Yes.
to the basics and say,
Exactly.
as an employee, because now it's not going to be a problem for the accountant anymore.
Yeah.
Whether you're an individual, you own a small business, or you're going to have to understand what tax and taxation entails.
Exactly.
So let's start with the employee.
Yeah.
When I see that little PAYE, and
Yeah,
most of the time, especially when you're starting to work, you don't understand what that is.
Exactly.
Let's start there. What does that mean when I see that on my paycheck?
So basically, pay as you earn is the amount that your employer pays on your behalf. Basically, it's the tax that you pay as an individual on the income that you earn. So any earnings that you make from your employer, they are taxable. The taxman needs to get something from there. Then based on how much you earn, if you are doing less than 48,000 in a year, there's no tax. But as your income grows, then the rate that you are taxed at grows. Is that at 5%, then goes to 12.5%, 18.75%, then 25%, and then now recently 27.5%. So basically, that's the tax that you pay towards government coffers.
And I'm going to use this as an example because I'm an employee, and most of the time I relegate this responsibility to my employer to say, it's your responsibility to pay this. I don't come in. But year after year, we see issues with people having problems with BRS. So as an employer, what is my responsibility? What should I be paying attention to when it comes to tax? And where does the employer come in and leave?
Yes. So when it comes to the employer-employee relationship, the employer pays tax on your behalf. Basically, they take that tax from you and pay it to BRS. That is the paying part. Then there is what you call return submission. As an employee now, that's your responsibility. Why is it your responsibility when the tax is already paid? It's simply because we don't know what other income you are earning. Some have two employers. Some have side hustles, as we often call them. So you need to account for that employment income that your employer has deducted, and also account for any other income that you have. Maybe you might have investments, you might have a business that you run, and you are earning income from there. So that's why now the responsibility of submitting the return moves from the employer to you as an employee, because you as the employee, you know how many sources of income you have.
Okay.
So the employment income is just the one source. You might have other sources.
Okay. Is there anything else that I need to be paying attention to particular?
Well, of course, when you submit the return, you need, where you have employment income, you need your tax certificate from your employer to show that they have indeed deducted tax and how much tax they have paid on your behalf. And then if you are running any other business, you need to prepare financial statements and file, and then pay any tax. And also document retention is important. So whenever you get that tax certificate, you need to file it nicely, whether you do it digitally or you do a hard copy. You need to ensure that you file those. Where you are running a business, you also need to ensure that you have those documents in place, because you can be audited. I know that mostly when you talk of tax audits, we think of businesses, we think of companies, but we've heard of lifestyle audits. An individual can also be audited to say, okay, we see that you are a high earner, you are doing 1, 2, 3. So we just want to check if indeed you are filing and you are declaring all the income that you are earning. I've seen individuals being audited in my practice. So it's not only companies or businesses that are audited. So that's why document retention is important, because where you don't retain documents and there's some income or there's some cash that came into your account and you can't substantiate it with documents, they might count it as income when maybe it's not even income.
So
that
your
have earned
records
this
then
income.
protect you to clarify
Yes,
what is income,
exactly.
what is
Then
not.
those records will protect you. So record keeping in tax is very important. It's core.
Yes.
Yes.
And then let's talk about the side hustle, because these days, everybody has got something, whether it's an Airbnb,
Yeah.
whether you just consult on the side, podcast.
Yes.
There's a little bit of income that comes in addition to being an employee.
Yeah.
If you're an employee, if you're running a side hustle. And then there's also small businesses. And you find that a lot of the time, when you start small, you might have your own account. That's how you are getting your payments. Maybe let's start there to say, if I have a side hustle or if I have a small business, when does tax become a concern for me?
Yes. So I think most of the time especially when you start as a small business, we do things informally, and then we think because we are doing things informally, then we are not taxable. Yes. So, but from a tax perspective, as long as you are earning some income, it becomes taxable. Whether you call it a side hustle and you don't recognize it as a true business in the ordinary sense, it becomes taxable. So any extra income that you do, whether it's podcasting, whether it's music, whether it's emceeing, you need to declare that income and account for the tax. But of course, there is part of expenses. So you need to know your expenses. What are your expenses? Fuel and, all the things that you incur so that you can earn your income. Then you need to account for that and then pay tax on the profit that you have made. So once again, we go back to documentation.
Yeah.
When you fuel that car, when you get a trip to go perform, do you keep that fuel receipt or you just throw it in the bin?
Can you get into greater detail there when you talk about deductions, your allowances, your bonuses, and what you're accounting for, just for a small business to understand how to navigate those areas?
Yeah, so you'll have, fuel expenses, you'll have accommodation, maybe you are traveling, so you'll have, for those who have offices, you have office space that you are renting out, or maybe if you have a home office, sometimes you get furniture, you get computer equipment. So those are some of the things that will be allowable because they are your business expenses. You incur those so that you can earn income from that. If you are a creative, you buy mics on all those related equipment, you need to travel. Those are some of the expenses that become deductible. So you are not charged on your gross income. The taxman recognizes that for you to make that income or to earn that income, these are expenses you incur. So you need to recover that expenses and see if you are in a profitable position, then we tax you. But if you are in a loss, because you can make a loss, then the taxman says, okay, it's cool, you are in a loss, but still file, but you can use that loss in the other years to offset the profits that you have. So one of the mistakes that people make is that whenever they're in a loss position, they'll just, there's no need for me to file. I'll just do a note.
They just sit back.
But indeed, you lose out on that loss that you could have offset in the years that you now make profits. And then you save on making tax. So for instance, if you didn't declare your loss this year, let's say it's 100,000, and then in the following year you have made 50,000 profit. If you didn't declare the loss and you just filed a nil return, that means you are paying tax on the 50,000. But if you have declared the loss, you are offsetting that profit, so you are still left with the 50,000 to offset in the other year.
Yeah.
So in the year that you would have probably paid 25% of that 50,000. Which is around 12.5, you are saving on that 12.5 by offsetting.
Yeah.
So because you didn't document and you just assumed there's no point of you to declare the loss, you have paid 1.5 that you could have used to improve your business or spend in something else,
Yeah.
that will contribute to growing your business. So those are some of the things that people usually miss out.
And you're bringing up that record keeping issue again, and I
It's- yeah,
think
it's core.
emphasizing
It's
it that
core.
is so core. It doesn't matter whether
It's
you're an
core.
individual,
Yeah.
small business. It is not a big business thing.
Exactly. Yeah.
Outside of that, what are some of the other big mistakes that you see small businesses make when it comes to tax?
Yeah, I think some of the mistakes that small businesses do, especially those who are into tendering, because normally they don't engage tax professionals. I'm sorry, maybe that's gonna
They
rub,
don't. They want to save money as much as they
it's gonna
can.
rub people the wrong way. They'll engage people who are not really tax savvy, and then they file nil returns when the business is trading, and sometimes that will result in danger, because when BES comes in and audits you and finds that you've been filing nil returns while you have income, then it can result in significant penalties. And it goes back also to the issue of tax education, because most of the time people know about tax clearance certificate.
Yes.
Because it is required for tendering, it is required at the bank. They then they don't know anything else apart from tax clearance certificate. So as long as they get the tax clearance certificate for them, they are fine. Whether they need to file financial statements or anything else, they don't know. So you find that people file nil returns, and when they get audited, they pay penalties, because simply to say you have been evading tax because you are declaring nil returns while you are earning income and you are in a profitable position.
Yeah.
Which can go up to 200% of the tax that you should have paid. So if you should have paid 100,000, you end up paying 300,000 simply because of those simple mistakes. So
Then I don't
it's an
think
important element.
businesses realize that they can undo the gains that they've made over years over the simple thing of
compliance.
Yes.
And yeah, I think also what I've seen is that especially owner managed businesses, we tend to focus on the technical aspects of the business that we think earns us money. And then when it comes to compliance, we find ourselves lagging behind. Whether it might be SEPA compliance or whether it's tax compliance, we don't take it that's serious until now, where that compliance document is needed somewhere. That's when you think about it. So those are some of the mistakes that I've seen and I've experienced. And people continue to do it, but I think at some point businesses fail because of compliance issues, not because you don't know what you are doing, but simply because you missed the compliance elements that are important.
Yeah.
But
if we are frank, sometimes it's a literacy issue, a financial literacy, or
well, I doubt. I doubt. Maybe yes, but I because we talk to them and we engage them and emphasize the importance of doing things right. But year in and year out, the same pattern repeats. The same pattern repeats. You find that someone will change. They are an accountant, a company secretary, or a tax agent every year. Every year. Because you are engaging on the same thing, but the pattern repeats itself because this person doesn't want to do the right things.
They're trying to.
So it's not
corners.
really.
It's not a literacy
it's not really
issue.
a literacy issue, but it's because when it comes to compliance, they don't see it as a core element of the business.
Yes.
But it is a core element of the business. They think if you are into construction, doing the construction is a core element of the business. If you are a creative, whether you are singing, dancing, or you are shooting into production, they think that's the core element of the business. And compliance, they're only thinking about at the end of the year now when they need to tender for something or when it is needed by the bank, and then rational.
And I don't think that's necessarily wrong. Sometimes focusing on your core expertise is important because that's what you're good at. But where you need then the smarts is to say, I'm not good at this thing. I need Tumelo to come in as as a tax expert and do his job, and I consult with him.
Exactly.
But maybe let's look at a business. If you're a small business, at what point do I make that decision that I now need to work with a tax consultant to handle this thing? Because I just want to podcast.
Maybe, but I think if now it turns into a pattern that we deal with the same issue every day, then that's where for me I have a problem.
Yeah.
Yes. That's
So do I start at?
It's a cycle.
I've set up a business.
It's a cycle. Yeah.
At inception, at registering, should I immediately start to consider?
Not necessarily. Yes. You can do it yourself with some guidance. Yes, but the issue is that don't repeat the same pattern of, we talk about the same issue every 12 months. Every 12 months, I said you need to do the filing. You haven't done the filing. Every 12 months is the same conversation. The conversation has to change. At inception, you can understand, okay, that's okay, no. The first year it's fine. But if you go to the second year and the third year, and it's still the same issues, you are only concerned about getting the tax clearance. Because remember, compliance, let's go into the, tendering or procurement world. Yes. Whether you are dealing with private or public, compliance is a core element. If you don't have a tax clearance, for instance, you don't qualify for the job, or they disqualify you for the job.
Yeah.
So if now during the year you don't do the compliance right, it means you might not get that tax clearance at the end of the 12 months.
Yes.
Yes. So you come back with those compliance issues that we addressed in the past year, and now you are still dealing with those things. You don't learn anything from that.
Then you shouldn't be in business. You shouldn't be in business.
Exactly. So that's where the issue is.
Yes.
Yeah.
Let's talk
it's
about...
It's important, of course, to focus on the technical aspects, but manage the compliance, do what you are supposed to do.
Very true.
That, because if you don't do it, then that technical won't matter now when people that want to give you business realize that you don't have that compliance aspect that you ignored during the 12 months that you thought this is the important element.
Yeah.
It always catches up with
you. It can ruin the reputation of your business as well.
Exactly.
I'm not working with you if you can't cover simple compliance issues.
Exactly.
Yeah. Yes. Let's talk about from a personal side, or not just a personal side, but maybe now the property side of it. And for me, this is one of the mistakes I made, and I had to learn the hard way. But when you start in property, whether it's through just buying property or an inheritance, I think a lot of us would maybe ask friends and say, okay, what do I need to do? Who do I need to see? And a lot of times the first step is a conveyancer.
Yeah.
And when you have not educated yourself or are aware of the tax implications, you put your full trust in the conveyancer as an expert to handle everything.
Yeah.
But they're not a tax expert either.
Exactly.
So when you're buying property or inheriting property, what do I need to be aware of when it comes to tax implications?
Exactly. Yeah. I think it starts with documentation again. So when you buy property, you need to know how much you bought it for. If you are inheriting it, you need to know what is the value of that property. Like I said, it goes back to documentation once again. You need to document, the amount that you bought the property with. If you are going to do additional construction, also that has to be documented. You say, this is how much I spent in construction or in upgrading or maintenance of that property after I bought it. Because at some point, if you are going to decide to dispose, there's what you call capital gains tax. And basically it is the profit that you make from selling that property. So if you haven't documented that, even though you know how much you spent, but because you can't prove it, it's going to be difficult for the taxman to give you that deduction.
Yeah.
to say, so if you are selling at 1 million and you had incurred maybe around 500,000, as long as you can't prove that 500,000, it will be difficult for you to get that deduction. So that's why documentation is important. Even at inheritance, when you inherit, the cost for you will be the market value. So at that point, you need to value to see what is the value when I'm inheriting. And you do the value, you keep the records. So that when you dispose, now you can have a deduction from that. So those are important elements when it comes to property ownership.
Yeah.
You need to well, traditionally you go to lawyers, and I think people think lawyers know everything.
Yes.
And of course, because tax is law, it has some elements of law. They'll think, no, because he's a lawyer, he knows everything, but unfortunately, it's not like that. So they'll miss out on some elements that are very important. So yeah, you need to inform yourself and say, who else should I consult so that I can do things right.
Let's expand a bit on the capital gains, because I struggled
Yeah.
with this one. Let's say I'm a teenager. I inherit in a property from my late parent. Why am I paying tax for gaining something that wasn't mine before? Let's explain that capital gains aspect and why I need to take care of it.
No, maybe before we go there, because you talked about inheritance.
Yeah.
So when you are inheriting property from your parents or from your guardians, and you are regarded as an heir, this what we call capital transfer tax. You don't get, which is more of a donations or inheritance tax. If you are an heir to those, you get exempt. You don't pay the CTT.
Yeah.
But then when you dispose, there's what we call capital gains. Then you need to pay tax on that. Now it goes back to issue of market value, because you didn't document the market value. That means you are disposing at whatever market value at that point you are disposing, and you are taxed on that because you don't know what was the market value. You didn't do the market value at some point. But if you consult with someone like myself, obviously they'll tell you that no, talk to some valuers, maybe 2 or 3 valuers, and give them the inheritance date to see what were the values around that time, and then you can use that.
Yeah.
Because you are inheriting, they can give you that value at some point, and then you can pay a reasonable amount in terms of the tax when they do the indexing and do all the other ones that are deductible.
Yeah.
Or sometimes, because you are documented, it can result in a capital gains loss, and then you don't have to pay.
Yeah.
But because we only normally, I see people only think of tax when now they're in trouble.
Yes.
That's when they remember, oh, there's this thing called tax.
Yeah.
They don't think about in their everyday life, but it affects us every day. So it's something that needs to be our mind, and we need to address it.
Yeah. And then for somebody who's got property
Yeah.
and then starts earning rental income, when does that become a concern and I need to start thinking about tax? Because I think a lot of the times you're thinking, I've got a little house, 2.5 akakwa, and I'm earning my 2,000. Should I be worried about tax at that point?
Yeah, that's, rental is business, and you need to declare, that rental. Because it's a business, it has expenses. So you need to deduct expenses that you incur from that business called rental. One of the mistakes that people make is that they then declare the income only. And then, of course, because you are paying the income only, your tax becomes high compared to someone who understands that there are expenses that they incur in running that rental business, whether it's utilities, your airtime, maintenance expenses, and all the other expenses that are related to that business. You know, so it's something that you need to also document and ensure that you pay tax if there is tax. If you have used a loan to construct or to buy that property, there is interest that you pay on that loan. It's something that is deductible. So you don't deduct that.
Yeah.
If maybe you are in a state land or in a tribal land, there's some, for ease of reference, I'll say tax depreciation or capital allowances that you can deduct as part of your expense. People don't know that because they don't go to the right people. So there's a lot of elements that people will miss simply because sometimes they do it because they're afraid of the taxman, so they just pay on the gross. Yes, but the taxman is a reasonable man.
Yeah.
It's a reasonable man. They understand that the expenses, as long as you are not doing anything dodgy, then they're generally reasonable, and they will allow you expenses that they need to allow you, so that you pay the right amount of tax.
When somebody owns a business that's growing, whether it's medium or it's become a large business, what are some of the tax surprises or penalties that they should be aware of and should avoid?
Yeah. So when it comes to penalties and interest, because there is penalties, then there is interest. So if you make late payments, you pay interest. And then, of course, now talking about the tax reforms, there is also a penalty for late payment. The interest is 1.5%, and then the penalty is 10%. So when it comes to late payments, you are looking at 11.5%. But of course, the new introduction of the penalty on late payment will come in, or will be effective next year, July. So they have hold on that one. They've deferred it. And then when it comes to late submission, you can pay up to 10% of late payment.
Yeah.
But you start at 50 pula per day for VAT, or 100 pula per day for income tax, which applies to individuals also.
Yeah.
But administratively, individuals haven't been charged that 100 pula penalty. But you'll never know when
Exactly.
they decide to implement it. So it's good for you to always file on time. And then the 100 pula or 50 pula penalty can be up to the maximum of the tax that you are supposed to pay. But the 10% one, it can exceed the amount that you should have paid. Yeah. So if you had to pay 100,000, that penalty can go over 100,000. It can be 150. Same applies to the interest. It's not capped to the amount that you owe. Yeah. So we know
compliance is
people.
critical.
It's critical. So even when it comes to documentation, and you don't produce some documentation, there can be some administrative penalties of up to 5,000 pula, 10,000 pula, depending on the documentation that is required from you.
Yeah.
So it's going to be very expensive to be non-compliant going forward. So you need to be compliant, whether it's keeping documentation, whether it's paying tax, whether it's submitting returns.
Yeah.
Yeah. And then, of course, the taxman has some privileges or rights. They have rights to get into any office and do some search and ask for some documents. So if you impede them in trying to do that, there are also penalties in relation to that. So, yeah.
And I think people think, we mentioned lifestyle audits earlier, and they think it's just for rich people. And I think with these tax reforms that are coming in, there's going to be a closer eye on people's revenue and so forth. Yeah.
And I think because we do things informally, we tend to think rich people are those who do things formally. Yeah. But you can do significant income doing things informally, and you miss out on the small compliance issues. Yes.
I think one of the most distressing surprises or things that I've seen when it comes to tax is when we talk about pensioners.
Yes.
And we've seen pensioners get their pensions wiped out by tax because there were things that they were not aware of. So as somebody who is a pre-pensioner or just coming into that age of retirement, what do you need to be aware of so that you don't get a surprise now that you're not having a regular income coming in?
Submission of returns. So if you submit your returns, regularly every year, like now the filing season has actually begun. It started on the 1st of July. It will end on the 30th of September. So these 3 months, people need to file their returns, because if they don't, and you are close to retirement, now before the pension can be released, the lump sum can be released, they'll need to clear with bears. And if you haven't been filing those returns, before they can actually release the funds, you need to file the returns. And I've seen people face, where they've changed employers. Some of the businesses now are closed, so you can't get your tax certificate. So sometimes you need to go to BES to ask for a copy. You might not get that copy, so you then face difficulties in getting your pension simply because you didn't file your return. The tax was paid most of the time, but the return was not submitted, because sometimes people feel because the tax has been paid, then they don't need to file their return. So as long as you have a tax certificate, file your return.
So tax areas can reduce your retirement?
Yeah. They can reduce your retirement, because you can't also file a nil return, because in the system they'll say no, but in our system it shows that there was some income declared, so we can't accept that nil return.
Another lesson I learned the hard way was, when you change employers and you get that liberty to cash in a bit of your retirement payout. And I remember the first time, probably my first job, I ate that money. We went on holiday to Cape Town with it. And at that age, there's no consideration of what this means for tax-wise. So is there anything I should think of at that point when I change employers when it comes to tax?
Yeah, exactly. It's important. And 9 out of 10 times when you change employers, you are changing employers to get a bigger salary. So that change will normally result in a payable, because now you have been taxed at a lower rate. Maybe you are moving from 12.5 or 18.75%, and the next bracket is 25%. So because when we look at tax, we look at the whole year. Now you find that now that little change qualifies the whole year for 25%, and now you need to pay extra tax. So those are some of the things that you need to look at and be prepared to pay something extra at the end of the tax year when the filing season opens, because your employers would have deducted what they know they should have deducted, but because of that change now, there is an obligation for you to pay an extra amount. So those are some of the, but of course for some of the people it results in a refund, but it's on rare occasions. Most of the time they'll need to be a payable, and of course where you in cash on your retirement benefits, because now you are changing employers, because you haven't filed, that process may be delayed simply because you have not filed on your returns.
So when we're talking as an employee, usually when we're talking about retirement, there's either an HR personnel involved or a fund administrator. And a lot of the times, I think the system is handled much by HR, and we don't ask questions. So if I'm an employee, what questions should I be asking either the fund administrator or the HR personnel to prepare for retirement so that I'm ready? Is there anything I need to pay attention to?
I think from them, what you can really ask for is your tax certificate. That's the only thing that they can help you with,
Yeah.
so that you can file your return. But other than that, there isn't much that they can help you with. Yeah, maybe they can advise you to ensure that you file, because they always deal with these things. They will advise you to file so that you can get access to your retirement funds.
Yeah.
Because otherwise, if you don't file, you don't get access.
Yeah.
Yeah.
Let's get back to that business aspect, and I think this is where, if there's tricks, or if tricks is the wrong word that we can
Yeah.
use, because you hear about offshore, and what is fair, what can I get away with, what can I use in terms of business to get an advantage when it comes to tax planning?
Yeah. Well, there is tax planning, of course, and then there is tax evasion.
Yes.
Tax planning follows what is within the law.
Yeah.
For instance, there are some industries that have favorable rates, or there are some locations that have favorable rates. If you talk of special economic zones, if you talk of SPEDU regions, if you talk of international financial services companies, if you talk of manufacturing, they have special rates that start at below as 5% up to 15%. Whereas normal businesses will be charged at 24.5, or normal companies will be charged at 24.5%. So you see that on average, the saving, if you are in those industries or locations, ranges between 10% and 20%.
Yeah.
Yeah. So, and then of course there are some industries that have special incentives, your manufacturing, your agriculture. Those are the industries that have special incentives.
Yeah.
Yes. And then of course for some businesses, it will just, you need to know how to handle, certain transactions. Yes. But still within the law, you need to know what provisions you can take advantage. You cannot take advantage of. But the difference with evasion is that when it comes to evasion, you maybe you under declare, or you overstate your expenses. So that is the difference.
Okay.
Tax planning, you use the provisions that are within the law to ensure that you take advantage of that.
Can you explain the offshore part? Because we've seen businesses that
Wow.
would base their mother company maybe in another country for tax benefits while they operate here. So what is offshore?
Well, for offshore, really, normally national companies, where they will base their businesses maybe, or headquarters, where the rates are low, or maybe where the rates are 0%, because there will be some jurisdictions where the rate is as low as 0%, 5%, 10%, and then they will base their businesses there. But if that income comes to Botswana, then it becomes taxable.
Yeah.
Whether it was not taxable in that area. But of course, if now that companies, any income from Botswana, it means it's beneficial for them at the end of the day. And of course, here in Botswana, it will become a deductible expense, and then reduce the taxable amount. But also you need to document the transfer pricing elements of that, because you need to charge the right margins according to the standard that are set. In Botswana, we use OECD standards. So it's not as simple as people often suggest. You need to know the right things, to do the right provisions.
So this is where the tax consultant might actually
really
really comes
This is
in.
where the tax consultant comes in.
And in that, when you are working offshore, have multiple business in different countries, most likely there are assets that you acquire in those countries. So how does one manage that? Where does tax become a compliance? Am I paying tax here and also in the other country for those assets? How does that work?
Yeah, so as long as they're in those jurisdiction, there will be tax there. But now when they come in here, that's when they become taxed.
Yeah.
Yeah. So basically, that's pretty much it. You need to pay tax at that particular country, and then of course, where you have paid tax in that country, maybe you are disposing property there, and there's tax to pay here in Botswana. They'll offset whatever you have paid in that country with what you are supposed to pay here in Botswana. So if maybe that country the tax rate is 15% and here you are supposed to pay at 25, so you pay the difference of that 10%.
Yeah.
Yeah, but where you have paid zero in that country, you pay the full tax here.
Yeah.
Yeah.
And I think it's one thing that we miss is when we import services. For an example, a consultant in the creative industry, we see people who bring in artists and they do their work here and they go back. What are the tax implications then? Because I think there's a little bit of a reform that happened there as well.
Well, I think talking of creatives, there is what you call withholding tax on entertainment fees. Yeah, so I think some festivals in the past almost didn't happen because people didn't pay.
Yes.
That withholding tax, we can't mention names. But that is an important element. Now, talking of the importation of services, as part of the reforms now, any remote service that you get, whether it's digital services, there's your Netflix and all that, you need to pay VAT on that. Whether it's professional services, you need to declare VAT on that. So I think the most common one, which is now, I don't think it will be implemented, that people used to know, is that whenever they went to service their cars in the neighboring countries, BES will inspect the car to look for that sticker. If you don't declare, then they said, please declare, and maybe they even charge you a penalty because you didn't declare upfront that you are from a service from that country. So it's the same concept.
Yeah.
Yeah.
So almost you also need to look into the quality of service that you're getting out there, because you can't go and use some bush mechanic
exactly, yeah.
who does not have any documentation and is not compliant either.
Exactly. Yeah. It is important.
So, and there's a lot of I think we talked about the discussion has to expand when it comes to tax, and also the education that happens.
Yeah.
But in what we've seen, especially regionally, we've seen conversations in South Africa, for an example, where VAT was discussed and then it was pulled back, and there was a whole lot of debate that was going on there. And then we are now here introducing these tax reforms, and the timing feels terrible. I think we talked about this earlier. Let's talk about that, government, why they need to make tax reforms.
Yes. Yeah. So tax is an important element of governance. Basically, tax, simply we can say it's government revenue.
Yeah.
Yes. And the world evolves. So as the world evolves, the tax laws also need to evolve, to match the pace of the economy.
Yeah.
So that's why we need to have reforms regularly. Like I said earlier, the last time the Income Tax Act was reviewed was 30 years ago.
Yes.
So
we've been behind.
We've been behind. And same for the value-added tax 20 years ago. Yes. But of course, there will always be, pain points. Most of the zero-rated items, the list have been reduced, especially when it comes to the food stuff. Like they've only left the simple fruits or basic fruits and vegetables, your spinach, your apple, your oranges, so your strawberries and your dates and your eggplants and all these other fancy vegetables now, they are no longer zero rated.
Yeah.
You pay VAT on that.
It's hitting the luxury side, the middle income.
Yes. So sugar also
is
no longer zero rated unless it's in its raw state. Yeah, the cane, sugar from cane. But when now you process it, meaning the sugar that we use every day is processed.
Yeah.
So we're going to have to pay VAT on that milk. Also, we're going to have to pay VAT on that
Yeah.
going forward. So in trying to increase the tax base and maximize on revenue collection, that's some of the items that will now become taxable going forward. And of course, the timing doesn't feel right
Terrible
because
timing.
prices of goods have been rising, prices of service have been rising, fuel costs have been rising, as and we know that as fuel costs rise, they drive prices of every other goods that we consume. So over and above that, we'll be having a VAT also. So it's maybe some of the things they would have considered and then deferred some of those. Yeah, but of course the luxury fruits and vegetables. Well, I don't think it's a big thing for that, but there are some elements that I feel maybe they should have deferred. Yeah, in terms of increasing the tax rate also, even for individuals or the so-called high earners. But yeah, it is what it is. We find ourselves in this situation, and of course there's the big one when it comes to private medical services. Well, my argument is that even though they were exempt, prices never went down.
Yes.
Because now, because businesses couldn't recover their input VAT, it means there's someone who needs to pay for that.
Yes.
And as a business, you can't make a loss simply because you are offering health services. You need to pay your employees, you need to pay your inputs. So because you are incurring that cost, you need to factor that cost in your pricing. And the consumer was paying for that price, even though it was exempt. So the exempts really didn't reduce the prices. For me, they remain the same. Even when you look at the BRS reporting in that specific year that the exemption affected, the collections went up.
Yes.
They didn't go down.
So they haven't struggled in that area, if we're honest.
So yeah, if you're honest, it didn't really impact government revenue. But what can impact government revenue and benefit the businesses and also benefit consumers is what you call zero rating, simply because the businesses will be able to recover their input VAT, and when they recover their input VAT, that means it's not a cost to them, because that VAT that they have incurred, BES will refund them that VAT, and then their prices can be competitive. But as we speak, even if government reverts to exemption, government remains the winner.
Yes.
Yeah, government remains the winner, and there's no benefit really.
So with government leaning more on indirect tax, are they being lazy? Because is there more creative ways they could have found?
To be honest with you, indirect tax is the simplest tax that you can implement, and when it comes to collection, you'll never go wrong. So that's why most of the time governments use indirect tax, because it's simple to administer. People pay, and then you collect, and then you go home, and then because it is paid by the final consumer, there are no deductions that you can talk about. So whatever the business has charged, they pay to government. And but when it comes to income tax, because there are always expenses that you can factor in, there isn't much to earn from there. But indirect taxes, they are gold.
Yeah.
When it comes to government revenue mobilization.
Is there something that we're missing? Is there something that we can learn, maybe regionally or internationally, that maybe they could have considered to say this is another option to earn revenue outside of this path?
Yeah. Of course, the taxation of remote services, which they are implementing, is one such area that they've targeted. But because from a policy perspective, they have adopted the VAT system to be broad-based and almost tax everything. Then because they saw that as an opportunity.
Yeah.
Unfortunately, now they've taken that stance, and that's what the OECD and the IMF encourages, and those are the organizations
But
that we
will
work
that
with.
be implementable? I mean, we're talking about your Netflix and so forth, which means they have to then adopt this internally within the country. Will that collection be easy?
It's not gonna be easy, but if you look at the UK, when they introduced that, I think they had very few companies come about, but it's still significant revenue.
Yes.
So whether it will be 3 or 4 or 5 companies, because it's going to affect your emails. We know the your Gmail, whatever that we subscribe to, it will affect those services. So it means more money. We know government uses systems from outside, so there will be revenue from there. So it's going to be significant, though not all players are going to be in, but it's still significant revenue because UK earns billions of pounds from that, even though the taxpayers that are in that space are few compared to the many that we know are in that space. So there are going to be few players that come up front and say, we want to pay, but it's still going to be significant revenue because the volumes of people, who use those services is a lot of people. So the maximization is going to become on the clients that those companies have. Yeah, it's not going to be easy to catch everyone, but the few that they're going to catch and the few that they're going to cooperate, it will be significant.
Have there been instances globally where such suppliers then pull out of providing a service within a country because of these reforms?
Well, we've seen that in Kenya, I think, where maybe there were threats, some countries threatening Kenya that they'll blacklist them, but it never escalated to that because some of the businesses wanted to cooperate because they have markets there, and it didn't really affect their margins that much, such that they can pull away. So yeah, there'll always be that. But I think because now globally the conversation around taxing the digital economy is a global conversation. Everyone wants to have a share. So you find that there's a lot of cooperation around that. So it becomes a little bit easier to administer.
What does this then mean for investment within the country? Because we've got this ambition to get a lot of investors coming, but then we're also increasing the tax opportunities for them. Does this affect us then?
I always have one answer when it comes to that. We often take tax as the pie or the pizza, but it's just a slice in the pizza. Meaning there are other elements that investors look at. When you talk of ease of doing business, how easy it is to register a company, how easy it is to get a license if you need to get a license. How is the utilities doing when it comes to power? Is it stable when it comes to water? Is it stable when it comes to connectivity? Do we have stable connectivity? Those are some of the elements that investors consider. Tax, of course, is part of it. Is it important, but it's not everything.
Yeah. So
we often sometimes focus on the tax part, while it's not really everything to investors. Investors want their life to be simple. When you talk of a one-stop shop where they can do everything there, let it be a one-stop shop. Let there no bureaucracy where I need to go to that office. From that office, I need to go to the other office. That office is not here, it's based in Francistown. I need to go there. That officer is not around. He went on sick leave, so I can't help you. So, those are the things that investors look at. Tax is just but one element, and it's not that really significant. So I don't think it will hurt us that much. And of course, regionally, we're still
We're a little bit
very
behind.
low. Yeah,
When
it
the
comes to the
infancy
tax
of
rates.
that.
So it won't really affect us. I think the conversation that we need to have when it comes to attraction of investors, even local investors, is that is it easy to
To do
get what
business,
you is it easy
yes.
to do business?
Yes.
And that's the conversation that we need to have.
And talking about, globalization, we've got these conversations that are coming in around the digital economy, being nomads, which means you're probably supplying your business or services to people around the globe, but you may be based here.
Yeah.
As creators, as digital nomads, what are some of the things that we need to be aware of when it comes to tax?
Yeah, so so you need to know rules where you are based. Of course, you need to know the tax rules. What are the obligations from there? Sometimes people say, I've earned this in the internet, but look, the source is Botswana.
Yeah, with the
because you are based
monetization
here.
coming into the picture now.
You are based here in Botswana. You are earning that income while you are in Botswana. So that's where your source. Then you need to declare it here. Whether you have paid some withholding tax in whatever country was paying you, it's neither here nor there. It's that when now you are earning it from here, you need to pay tax on that. Of course, they'll give you a credit on whatever you've paid in the other country, but you need to ensure that you declare that income and you pay that income. We don't care that you have gone to South Africa, you performed there, or if you've went to UK, but at the end of the day, as a resident of Botswana, you need to pay tax on that. So that's really what they need to know, that you might be earning it globally, but at the end of the day, the source originates here because that's where the business is really based. Yeah.
Are revenue service provided geared to collect tax from content creators and similar service providers and consultants?
Well, it's I think it's a conversation that it's a continuous conversation that they have with people in that space, because I think most of the time we see creatives, we see it as an informal thing.
Yes.
It's not a business, but it's a business. From a tax perspective, it's a business, and you are earning income. And the taxman doesn't care what type of income it is, as long as it's income, they tax it.
Yes.
But sometimes I think also culturally, even when it comes to athletes, we just think it's tax-free income. When you are a footballer, or when you are an athlete, a sprinter, or when you sing, we don't see that as income, because for us, income is when you go to an office. That's what we think a job or income is, but it's more than that.
Yeah.
It's more than that. So you need to declare that income and pay tax on that.
Okay.
Yeah.
And we can't have this conversation without talking about the AI revolution.
Yes.
Is it going to have an impact on tax compliance in your view?
Yes. There are some countries that already use the AI. Next door in South Africa, the taxmen, when it comes to AI, they have their AI components where they can use AI to estimate your tax. They use the AI machines for your filing. So it's even here, it's something that they're exploring. So it's going to be an integral element when it comes to estimating your income, doing investigations on you as a taxpayer, and all that. So it's here, and we need to embrace it.
Yeah.
Yeah.
I think with the tax reforms, there's been a lot of talk about improving collections and monitoring compliance and so forth.
Yeah.
And I think if we look at the local, let's say BRS, are they ready for this age of compliance collection? Are they geared to be able to do that job? I think more of detecting undeclared tax and revenues and so forth.
Yeah. They're working on the introduction of electronic billing machines. Basically, if you are VAT registered, you'll be required to use that electronic billing machine. and it will track your income. So it will be real-time reporting. Whenever you issue an invoice, they know you've issued an invoice to so and so. And whenever you receive an invoice as a business, they will know that you have received an invoice from so and so. So that will help in detection. And where there is under declaration, they will help in that detection. So there will be improvement in that aspect, and it's a brilliant way of ensuring that the revenue base is protected.
Yeah.
But also, they've been trying to improve on audits, ensuring they audit companies, they audit individuals in different sectors to ensure that everyone is filing correctly when they're supposed to file. So there have been improvements in that aspects, but of course they can do more. But with the introduction of that electronic billing machine or electronic billing system, it will make things easier for them.
So there'll be no hiding from the taxman.
It will be very difficult to hide. It will be very difficult.
Okay, just as we close, maybe just some last words from you. Yes. If there's one thing that you'd want people to know as an individual, as a business, when it comes to this area, which is your expertise, what would that be?
Yes. I think I'll say, tax is more than a tax clearance certificate. Yes. It's an ongoing thing. There's ongoing compliance. You need to file your pay-as-you-earn monthly returns. You need to file your other withholding tax monthly returns. You need to file your VAT returns as and when they need to be filed. And even when it comes to the corporate income tax returns. And also as an individual, whenever you need to file that return, no matter how much you are earning. We are in the filing season now, so between now and September, ensure that you file your tax return so that you don't find yourself in the wrong side of the tax law. So yeah, that's basically it. Tax compliance is more than a tax clearance certificate. It's an ongoing thing. So ensure that you file as and when you need to file.
Okay. And I want you to show off a bit, if you can just move the text platform. So you guys know where to find Tumelo. I think he's got a brilliant platform that he has that demystifies text and everything around it. But thank you so much for coming on the platform. And hopefully we will share on both our platforms so that we can reach as many people.
No, exactly.
And make this an ongoing conversation. Thank you so much, my friend.
Thank you so much.
Yeah.
Good.